WB. Vietnam's economy continues to show resilience. The World Bank, WB, on March 11 released its brief updating Vietnam's economic development in March, stating that the economy continues to show resilience and is recovering although downside risks have heightened. Illustrative photo. Available data suggest continued recovery of domestic economic activities, with industrial production growing by 8.5% year-on-year and a broad-based improvement in manufacturing despite the surge of new COVID-19 cases to over 100,000 infections per day by the end of February. After falling in January, production of computers, electronics, and optical products bounced back, posting a year-on-year growth of 9.1%. Apparel manufacturing maintained strong performance with a 24.7% growth against the same period last year, according to the report. Retail sales grew by an estimated 3.1% in February. Sales of consumer services continued to recover, increasing by 5.9%, the first expansion since May 2021, as accommodation and catering services sales grew strongly. Sales of goods increased by 2.4%. With imports growing much faster than exports, trade balance deteriorated from a surplus of $1.4 billion in January to a deficit of $2 billion in February. Higher export growth rate could be attributed to phones, computers and electronics and machinery, whose exports grew by 6.2% in February. Exports of garment textile remain strong, growing by 25.8%. Strengthening imports partly reflect a jump in imports of phones, computers and electronics components from 14.9% in January to 32.3% in February. Imports of petroleum products also increased by 146.8%, clearly reflecting rising oil prices. By trading partners, exports to the U.S. remained robust, expanding by 14.6% while exports to China rebounded, growing by 19.5% after a 15.2% drop in January. The WB brief also indicated that FDI commitment slowed while FDI disbursement continued to recover strongly. Vietnam attracted $2.9 billion of FDI commitment in February, 15.9% lower than a year ago. Most of the commitments were made by existing firms intent on expanding their production facilities. The disbursement of approved FDI projects increased by 7.9% in February, a third month of increase. CPI inflation remained subdued thanks to relatively stable food prices and still weak domestic demand. Credit demand remained strong after the Lunar New Year, keeping overnight interbank interest rate at 2.56% at the end of February, compared to less than 1% at the end of 2021, the report continued. Budget balance saw a $1.1 billion surplus in February as revenue performance remained strong. Expenditures increased thanks to improved disbursement of public investment. Revenues grew by 5.3% in February while expenditures increased by 6.1% thanks to improvements in the execution of the public investment program. Over the first 2 months, the Vietnamese government collected 22.9% of total planned annual revenues. The government also spent 12.8% of planned expenditures. Public investment disbursement improved significantly, reaching 8.6% of the target set by the Prime Minister, much higher than the rate 5.1% recorded in the same period last year. The state treasury issued $412 million worth of government bonds denominated in local currency in February, raising total bond issuance to $1.4 billion, or 8.1% of annual plan in the first 2 months. Thank you for watching the newsletter, and don't forget to subscribe to the channel.